Hey everyone, Couch Investor back to another earnings video for today. So let's talk about Pinterest. At the time of making this video, Pinterest is up, yes, 21% after hours, which is crazy, especially if you compare what happened in the last couple of quarters. Usually it was down 17 to 20%. So very happy to see that it's up 21%. But then again, stock can be up, stock can be down. What is really important is how well the business is performing. And well, while the numbers, if you look at the first glance, the numbers might look a bit meh. If you read through it, and I just finished with the earnings call, the future, the outlook looks much better than what the market has feared, especially after listening to Snapchat and Meta. Pinterest is in a much better place. This was also the first earnings call where, Ben is not the CEO anymore. We've got a new guy. He is, how should I say it, a breath of fresh air. Now, I'll stop wasting your time. Let's jump right into the first couple of numbers. So I'll start with the shareholders letter, and this is obviously the letter from the new CEO, Bill Ready. He talks about, why he joined Pinterest, etc. Now, I'm gonna skip all that. I'm gonna skip this. We're gonna have a look at that in a bit. But what I do wanna show you is something very interesting, and that's obviously the shopping side of the platform. Now, we've talked about shopping a long time because, it is something that was missing on Pinterest. It's great that you come with an idea, you want to be inspired, but eventually you want to buy something. And we've talked about the acquisition of the Yes platform in another video, but they did mention during the earnings call that they have registered over 1 billion products in the system, which is a big milestone. They also said that 10% of the watch time is now video, and we do know that video converts much better, whether you're selling a product or whether it's just for fun. So that's great. Now, with regards to shopping specifically, they say right here, we continue to expand our shopping capabilities for merchants and advertisers. In Q2, our shopping ads revenue grew at double the rate compared to overall revenue year over year, which is very good to hear because, again, this is a smaller side of the whole Pinterest business, but it's very good to hear that, it is a positive growth here and a fast one. Now they're focused on streamlining the functionality for advertisers to use the shopping features. First, the advertisers in all shopping markets can now leverage the Pinterest API for shopping to manage their inventory and update product availability and price in real time, which was an issue before. Second, they introduced product group suggestions so merchants can easily add or remove groups for their shopping campaigns or brand storefronts. This reduces the friction for merchants to scale their presence. Now, one last thing from the shareholders letter before jumping into the overall report. So it's obviously MAUs, monthly active users. So while global monthly active users declined year over year, the global mobile app monthly active users grew high single digits, accelerating off Q1, and in the United States and Canada, mobile app MAUs declined 2% year over year, an improvement from the year over year rate of decline they experienced in Q1. They saw continued strength within the younger demographic, with global Gen Z users growing low double digits year over year. Now, one analyst asked, and that I believe was the last question on the earnings call, and that's why don't we get mobile MAUs instead of the overall MAUs from the business, which was, to be honest, a very good question, and it would be very useful to get. Now, right now we're not getting it. Maybe we might get it in the future. The answer was not very clear. He said we are taking the feedback, etc. So there is that, I guess. Now, before I jump into the other numbers from this report, I would appreciate it if you leave this video a thumbs up. And if you haven't subscribed to this channel and you want to stay up to date with all of the big earnings reports this season, hit that subscribe button. And also, if you want to support this channel, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor and make sure to check out all the other links in the pinned comment. I would appreciate that very much. Now, the numbers. So revenue reached the worst number you can think of, $666 million. That's up 9% globally, 7% US and Canada, up 10% in Europe, and up 71% the rest of the world. Now, all of those regions are also up quarter over quarter, so that's nice to see. Now, as for MAUs, monthly active users, although it's down 5% year over year, we can see that from Q4 2021, it has been stabilizing, and that's very, very good to see. Now, yes, in the United States and Canada, quarter over quarter, it has still been decreasing. The same goes for Europe, but rest of the world goes up. Now, again, rest of the world, as you can see right here, is, well, barely monetized. Yes, average revenue per user in rest of the world is up 80% year over year. But then again, it's nothing compared to United States and Canada, which is up 20% year over year, or Europe, which is also up 20%. Overall, ARPU is up 17%. Globally, up quarter over quarter as well. So yes, they are losing, let's say, highly monetizable users, but at least the overall number is becoming more stable. Now, as for costs and expenses, this is non-GAAP, obviously. This has been increasing quite significantly, let's say. So cost of revenue up 29%, R&D 37%, sales and marketing 27%, and then G&A 35%. Now, they did say that margin expansion will start again in 2023. I believe they mentioned something of 100 basis points margin expansion going into next year, if I heard it correctly. If I'm wrong and you heard it better, do let me know down in the comments below. But they are using 2022 as a year of investments. So 2023 and onwards will get back to normal. Now, as for adjusted EBITDA, the same thing here. You can see adjusted EBITDA margin has come down, should become much better towards the end of the year and then starting 2023. So that right now sits at 14%, adjusted EBITDA at around $92 million, which is down significantly, obviously, from last year. Now, they did also talk again a bit about the Google algorithm change that happened last year, how that is still affecting the business a little bit. That's why you see growth numbers here and also MAUs a bit, well, weak, let's say. The new CEO also touched on Elliott Management at the very, very start of the earnings call. By the way, Elliott Management, which are activists, which have taken around 9% stake in the company, also released something official right when Twitter released the earnings report. But what he basically said is that he talked with them. They have a long-term view on the growth story of Pinterest, which is always great to hear. And then he asked, obviously, the analyst to focus on Q2 and onwards and not on speculative stuff. Now, I do want to show you, obviously, the outlook that they gave us for the Q3 and then full year, which was very well received and probably one of the main reasons why the stock is up significantly after hours. Now, before I do that, actually, I want to show you how healthy, let's say, the balance sheet looks. So they ended with approximately $2.66 billion in cash, cash equivalents, and marketable securities, which is good enough. Net cash provided by operation activities for the last 6 months was $333 million, yet a bit less than the same period last year, but still generating cash, which is good. Net loss for the quarter compared to last year, which was net income. Now, as for guidance, it's a bit broad because of the macro environment, but still much better than what most expected. So the current expectation is that Q3 2022 revenue will grow mid-single digits on a year-over-year percentage basis, which takes into account slightly greater foreign exchange headwinds. Told you this thing would come on in every earnings report. They also expect Q3 non-GAAP operating expenses to grow low double digits % quarter over quarter. Now, for the full year, there's no change to their expense outlook for non-GAAP operating expense growth in the range of 35 to 40% year over year. Now, they did mention on the call that, well, the CEO said there is no such thing for him and for the company right now to grow at all costs, which means that they do want to strive and be profitable while still growing, but not growing without thinking twice. All right, so concluding this video and concluding this quarter. Now, again, if you look at the stock, it's up 21% after hours. You might think, amazing quarter. It wasn't an amazing quarter. It was an okay quarter because the bar was set so low for Pinterest that they met it maybe even exceeded it a little bit, especially with the guidance that they gave, with everything they told us during the earnings call. More positives than negatives. And in today's market, and for a company like Pinterest that has been hit hard in the last couple of quarters, that grants them a 20% jump after hours. Now again, if next quarter it's bad, maybe worse than expected, I don't know, revenue is down, no profitability, MAUs are down again, story might change, right? But right now, I stay neutral, it's fine, I'm still holding Pinterest, I plan on holding it for a long time. Again, no talks about acquisition as of now, but it is something we should all be thinking of because it can happen any day at any time. Now, PayPal reports earnings tomorrow, so does SoFi, and so does AMD. Now, I think I'm going to do SoFi first, then PayPal, and then if you want AMD, and then on a later date, Airbnb. Now, if you want to watch all of those videos, I'd appreciate it if you hit that subscribe button. And if you enjoy this type of videos, leave it a thumbs up. Obviously, do share all your thoughts down in the comments below, and I see you all in the next one. Bye-bye.